All right, hope everybody's doing well. I wanted to do this video to talk about how investment styles tend to change over, I guess, the duration of how you invest. I'm gonna share a personal story as I usually do, because we actually did a post about it a couple of days ago, and as I looked at that post, I started to see just how much actually gone through a few of those styles. So I'll share the post, of course, and then I'll talk about it. But let me just say a quick word of prayer to start, and then we'll get into the discussion. All right. So, Lord, we thank you so much for this day. We thank you for the ability to produce wealth. Lord, we just give you thanks for giving us wisdom, knowledge, and understanding to be able to invest, to be able to work to multiply what you've blessed us with. So, Lord, we give you thanks in Jesus' name. Amen. All right. Hope everybody is doing well. We have, right. So I'm actually in the middle of our portfolio makeover challenge. So we just finished day 2. I just wrapped up day 2, and it was a great discussion. We're actually doing portfolio reviews in the middle of it. So each person in the challenge gets a chance to submit their portfolio, and we actually go through that discussion live too. So we don't know the names of whose portfolio it is, but we can have a discussion based on what we teach them about managing a portfolio and just apply that discussion. It was a great. We went well over the time, but it was well worth it. So we have day 3 tomorrow. So I said, well, let me do a live stream. It's been a while, right? So I do have some market developments that I want to go through as well. So I'll do that a little bit later. But let me talk about the main thing first. And then I'll get into, some of the other stuff. Because I know there are some companies you guys want to maybe talk about, etc. Right? So I'm going to share my screen and share just what we would have posted, right? So this is on our Instagram page. If you don't follow us on Instagram, you probably should by now, right? So please, if you haven't followed us on Instagram, be sure to do it. But we did this post August 7th, so 8 days ago, about the types of investors, and we asked which type are you, right? So I'm going to talk about these, talk about what it may look like, right? So the first one we have here is the collector, and trust me, I've seen this, right? At one point, I was a collector as well. So the collector is that person with 20 stocks, 25 stocks, 30 stocks, 35 stocks. We were actually on this live stream when somebody said they had 53 stocks, right? So you buy whatever looks interesting to you. You buy whatever is being mentioned. You are collecting stocks. You are just like persons would collect shoes or collect watches. I'm a watch guy. You collect stocks, right? So you buy whatever looks interesting, but you have no real plan. So the pro, of course, you're open to ideas. The con, of course, your portfolio is literally a mess. Now, again, I'll say that I do understand this actually quite a bit. At one point, I was looking back on the last live stream, going back to some of my old portfolio statements. Like there are some stocks I did not even remember that I had in my portfolio once, going way back, right? And looking at where those stocks are now, where I am now as an investor. I was a collector. I had at one point 20 to 25 stocks. Fast forward, and that was like maybe 7 years ago. Fast forward to where I am now, I have 5 stocks in my portfolio, right? So I've gone from a collector to somebody who focuses on a very narrow set of stocks, grow those, get gains from those, and then I look to see what else is there, right? But being a collector is real. I've seen it. I know persons who are collectors right now, and you should really think about that, right? There's also the person who, is yes, exactly, Garvin, right? So it's just something that when I looked back at my statements, I realized just how much I used to collect stocks as well, because you didn't want to sell one and then it starts to move. So you're like, let me buy it just in case, right? I did a lot of just in case, right? Certainly we certainly live and we learn, right? So the waiter now, there are persons who, and I was gonna say this is Chike, but I don't know if he's on the stream. But Chike, if you're watching this, you're certainly a waiter, right? Chike is somebody who I know will do a lot of analysis, right? Research, he sometimes I find gets lost in his analysis. And I used to say to him, you don't actually make money until you buy, right? That's when you make the money. It's not when you do the research, right? So there are certainly gems in research, there's value in research, but this person don't actually take the step, right? Because the money is made. The money is not made when you sell. The money is made when you buy, right? I firmly believe that, because the decision to buy is what sets the stage for whether or not that was a profitable decision or not, right? So the waiter, the pro here is that you value preparation. In some cases, you may be over prepared. But the con here is that you may be stuck in the analysis, because let me tell you about this as well, where, and I've come to say this, you'll never know everything you need to know about a stock, and two, if you eliminate all possibility of risk, there's no possibility of reward or meaningful reward. So there's no risk-free investment. There's no situation where you know everything you need to know to invest. You still have to make a decision, just understanding that there are some things you may never know or never find out, right? And if you wait too long, there is such a thing as missed opportunities. Now, the market will always present us with multiple opportunities. So there's certainly that, but we can miss some because we don't want to take a risk. We don't want to take a chance. So we have to kind of weigh that, right? So if you're a waiter, I say give yourself. So I'll give myself a month, maybe 2 months of research if it's something that has a certain level of risk. Or let's say I want to put a massive amount of capital on it. I will wait to ensure that my thesis is sound, because I'm not going to put, $3 million, $5 million, $10 million on an investment that I haven't researched or done adequate due diligence for. But if I'm researching 6 months, 7 months, 8 months, 12 months, now that's different than waiting for the right opportunity to buy. Now, after I've done the research, I may say, well, no, it's not the right time to buy. Let me wait for certain things to unfold, then I buy. That's different here, right? This person is more they're focusing more on the research than the actual investing, all right? So, and by the way, as I'm going through these, tell me which ones sound like you, appeal to you, maybe you can resonate with. Let me know, all right? So there's a chaser, right? If you remember, we actually had a shirt that says "Don't chase," right? And that's because this is a real thing. Now, again, confession is good for the soul, they say. I would chase. I used to chase. I would be in groups. I'm looking for the picks that persons are saying. I'm looking for what is going to be the next hot thing. That was because I didn't understand how to make the decision for myself. So I relied a lot on others. So when you typically chase, you are kind of being swayed by wherever the people around you are pointing you. So you're not necessarily even jumping yourself. You're kind of, hear the stock in one group, or you see the stock somewhere, or you hear somebody mention it somewhere, and you just jump in because you don't want to miss out. So there's certainly some FOMO there. and you don't really take the time to do the research yourself, so you're at the mercy of what others would recommend. So you can move quickly, right? Chasers will typically, you see the stock, you mentioned you're buying it first thing Monday morning, or buying it first thing next day, but you rarely stick around long enough to benefit. Meaning, as you see that start to go down, maybe you get nervous and you jump out because you thought you were wrong, or maybe you think it's not going anywhere, or it's not moving fast enough, right? And so those who chase, again, not throwing any shade, this is something that I know very well, because for a season I did this. It was frustrating. It felt like the adrenaline rush you get when you place that order and you look in that queue, and you're not seeing it moving, or you see your order filled, you're like, yes, it got filled, and then the price not moving. Like, when I didn't understand how the queue worked, I would place orders and be like, well, this need to move right now, because I'll see people, say they were able to get 15% in a day or 20% in a week. And I'm like, well, I should be able to do that too. So I was trying to invest to match what I saw others, portraying or projecting or saying that they do, right? Come to learn that sometimes people say things that they don't actually do. And so it was important for me to have just the confidence to invest in my own way. And I've seen the most meaningful success investing the way that naturally fits, who I am, right? So the long-term thinker, you buy quality and hold for the long run. So this, I mentioned this at the start of the Portfolio Makeover Challenge earlier tonight, when I say that, a lot of persons, for example, we have Warren Buffett as the benchmark for investing, right? We want to invest like Warren Buffett. And what I did say here, because Warren Buffett is a consummate long-term investor, as they would say. Now, I was saying to them, as making the point that investing the way that Warren Buffett invested in the 60s, 70s, 80s, etc., is different investing now. One, the conditions are different, the market is different. The way in which you make money from investments have changed, meaning the dynamics that impact stock prices in the short term and long term are very different. So I was actually making the point that when you think long term, this idea of buy and hold and, kind of lock your eyes against it. So the buy and hold part is not the issue. It's this idea that you simply just need to leave it and do nothing else for a long time. I think that part is up for debate, but let's focus on the style here. So you're patient, you have a big picture mindset. You're looking at your investment from a long-term perspective, and you're at least taking the approach that you're going to always be invested. There is a cost to this. You may miss some short-term opportunities, which is okay, right? I think what matters is when you need your returns, right? Because some persons will say, why give up gains in the short term? And I will say that if it is that I need my money in 10 years, and in 10 years I have meaningful returns, does it matter that I didn't take every short-term opportunity? But then at the same time, if you don't manage your portfolio well, and in 10 years you're not able to meet your goals, you can't go back and change it. So this idea of I'm a long-term thinker, you have to be doing the right things as you prepare and plan for long-term. All right. So Humble Boss saying I'm the long-term thinker. Okay, cool. I think it's certainly important to look at your portfolio in that way. Meaning you have to have a mindset that you'll be investing for the rest of your life, right? To me, that's a good quality of a long-term thinker. But you certainly can't ignore the realities of what's happening in the short term. You can't ignore the consequences of what's happening now in in terms of impact for the future, because especially it's when you're looking at decisions that have implications for when you may need that return. All right, but certainly there's value in having a long-term mindset. I wouldn't say I'm a long-term thinker anymore. I used to have this really long time horizon, but I think with this current climate, you have to take advantage of short to medium term, because the future to me is a lot more dynamic than we once thought, especially with all the disruption we've seen, with all the different things that will impact how we invest. All right, 2 more here. So the DIY analyst. So this is who I think I am now, right? The do-it-yourself analyst. I'm looking at every report for all the companies that I own. I'm looking at all the news that relate to that company. I'm doing my deep analysis. I'm consuming everything that has to do with the companies that I own, or the ones that are the stocks that relate to the ones I own. So if I'm in a particular sector, I'm researching everything in that sector. So this is me, right? So a pro here, well-informed. I'd like to say that I am. That's why I have a lot to say on these videos, because I am well-informed. The con here, can overcomplicate simple decisions. That's definitely me as well, right? I can't tell you how many times I've seen an investment opportunity. I'll say it to Rennie. I say, I think this stock is going to do well on X date, or this is going to happen and this is going to be a good catalyst, etc. And she's like, so go ahead and buy it. And I'm like, no, let me wait. It may not, it may this, it may not. And the date will come, the thing will happen. I'd say, wow, I was right about that. She's like, well, you didn't do anything about it. And that would be like a trend for a while. I'd say, I really like this company. This has happened, and I see it's gonna connect to this other thing, and let's do this. She's like, okay, go ahead. I'm like, no. So it can really overcomplicate simple decisions and when you're doing it yourself. And that's because I think we don't always have somebody because we're doing it ourselves, we don't always have confidence in our own analysis. Meaning, I may think that I'm seeing something that nobody else sees or will see. Because remember, other persons have to other investors have to see what you see in the future for the price to move, for you to be able to benefit, right? As a Kenton asking if that's procrastinating, possibly. It could be a fear of loss as well. It could be that I don't want to lose money. I don't know. It's different things. So sometimes I would say I feel like I'm wrong. Sometimes I feel like maybe my timeline is off. Maybe I feel like I'd say it's indecision, or indecisiveness at times, right? But yeah. So on the previous point, Nicola was saying, or NB Lee was saying, long-term doesn't always pay off if you are not looking after your portfolio. Many opportunities will pass you by and trade. Exactly, that's what I was saying, where this idea that you can just kind of set it and forget it, buy quality and hold for the long run, that's dangerous. That is dangerous, right? I think it's like a tree that you prune. Your portfolio is a tree that you prune. And when it's like that, oh my gosh, what's the tree that Mr. Miyagi was pruning in Karate Kid? I don't remember, the bonsai tree. Yes, it's like a bonsai tree, right? You have to, do some clippings, you prune it here and there, and then it can become this beautiful thing that gives you the type of returns you're looking for over the lifetime of your investments. But I think this idea that you just buy a bunch of stocks, sit on them for 20, 30 years, that's a very dangerous prospect, right? So yeah, I do agree with you. And the final one, which again, I'll say that I've seen, right? The guess and go. You don't really know why you bought what you did, right? So, and I see this a lot in like portfolio consultations where I'm helping, like I'm coaching persons to kind of help to educate them as to what they can do for themselves. And I'll ask the question, okay, why did you buy this? I don't know. What I'll ask a simple question like, tell me why you have this portfolio. What went into these 10 stocks or 15 stocks that you have? So a pro, of course, at least you're in the game, at least you're investing. The con, which is I'm not even sure if it overcomes the pro, because if flying blind is very dangerous, right? It usually doesn't end well, right? Meaning you may be in profit and you don't know whether or not you should sell. You may be in losses, you don't know whether or not you should move on. And so it's like you're literally just figuring it out as you go, but mostly you don't know what you're doing, right? So guess and go is dangerous. So yeah. All right. Yeah, so as I said, I did so that for me, this is me certainly, right? And I remember someone said, so we did financial ratios in the challenge last week. We had a mid-month call and we're doing that. And I think somebody asked if I'm trying to turn them into accountants, right? And I'm like, no, but these type of things, right? Teaching persons how to do ratios, teaching persons how to analyze financial statements, teaching persons how to understand the market and understand have a process to invest is a very valuable skill, right? Because when you have that skill, if you become your own personal analyst, if we all become analysts, right? Everyone who is here, if you learn to analyze your own investments, you'll be ahead of so many people, right? And it's the best way to do it, I think. I think that we have enough resources and the ability to learn for free in some cases to at least get started. Then we can make enough to at least be able to invest in more help if we want to do that. And then there's nothing that should stop us from making meaningful returns or certainly above average returns, right? So yeah, I just wanted to talk about those real quick because I thought it was interesting for us to do that post. Now, am I still sharing my screen? No, let me stop. Okay, I'm not sharing anymore. All right, cool. So there are some companies that came out. So mostly you saying dividend investor. Well, we didn't have that on the list there, but that's cool. Being a dividend investor is certainly a good one. So call me Simpson, I think on Instagram says my most common con is the price fluctuations. That I mean, so volatility is your friend. So call me Simpson. What you need to do is learn to take advantage of volatility, right? You need to learn to embrace it. You need to learn to look forward to it. It's a part of the process. It's a part of investing. So don't shy away from it. Don't be nervous about it. Expect it and then take the necessary steps, right? All right, so I do want to talk about quickly some of the things that are happening. Some reports have come out, and certainly I want to look at some of them. Let me see if I can find any. Hold on. Let me know which companies you guys may want me to look at. It's been a while. It's been a while since I've looked at anything, so let me find some stuff and then bring it up. All right, I'm just gonna bring up our news feed and see what comes out now. You say One Great Studio, Lennis, did the report come out? Did One Great Studios report come out? Let me check. Because I am actually waiting on theirs. I see their stock is up 15%. So did the report? Oh, August 14. Okay, cool. Let me check it out. Hold on here. Newsfeed. Get that out of the way. And then, all right, let's see here. So for their Q2, all right, so end of period share price 39 cents, market cap 660. All right, let's focus on, so revenue is up. That's certainly good here. Net profit though is, it's saying minus 15 here, so I'm assuming that's million. I'm not sure yet. I'll see when we get there. For the quarter ended, One Great Studio reported strong revenues of 105 million, up 37% from Q1 and 24.4% year over year. The company also returned to operating profitability and reduces net loss to 2 million. Okay. Balance sheet is here. Cash and short-term investments have gone down. Total assets have gone up. Liabilities have gone up. Liabilities have doubled, more than doubled actually. Total debt reduced. Total equity pretty much the same. Wait, did I miss something? Where's the? Oh, it's taken. Oh, this is their summary. I remember that they do summaries for their reports. I want to find the full report though. Okay. All right. I like to look at the numbers for myself because again, I'm a DIY analyst, right? Key customer metrics. I know this is one that they focus on. So total clients served 93, average client spend 1.13. I feel like that average client spend number has gone down, if I'm not mistaken. Back 2 years ago, wasn't that like 1.5 or higher, I think. Revenues from retainer 65%. And breakdown for revenue, Caribbean is 66%, North America 27%. I'm assuming that's mostly high voltage, and Asia and Oceania and Europe 1.1. So I'm not gonna go, since this is a quick review, I'm gonna read the outlook and then go straight to the P&L, right? So our house of brand strategy helps the company grow smarter, not just bigger. It creates synergies across markets, talent, and technology, making it easier to scale regionally without adding complexity. Each brand leads into its own niche with a distinct voice and value while working together in a unified cross-functional model. While still early in its execution, this unified strategic approach has strong potential to unlock long-term shareholder value. Looking ahead, our focus remains on advancing our strategy by driving growth across existing brands while realizing cost efficiencies from shared service investments, fostering a team culture of continuous learning and agility in adapting to industry shifts, and selectively integrating new brands. So what I would say here, and I know their AGM is next week. So of course, you know the key thing that they said here, right? So they are, while still early in its execution, this unified strategic approach has strong potential to unlock long-term shareholder value. So I would say I would love for the company to say, for example, what they're projecting will happen as a result of this house of agency brands strategy that they're going with. Because I mean, we see it with like the high voltage brought in, the DRT brought in. So the assumption is you have all of these brands that you can kind of build out and you become this kind of strong ecosystem of companies that can serve your clients in multiple ways, increasing client spend, increasing wallet share for the client, and you can have services that complement each other. It certainly can work, but it will certainly require pretty much flawless execution, right? So I said I would focus on P&L. So let's see here. So we'll focus on, so for the 6 months, revenue is higher there. For the 3 months, revenue is 20 million higher. That's about 25%. So that's certainly good to see. Gross profit is higher on the 3 months. Operating profit is higher here, but for the 6 months, they're actually based on admin expenses. They end up, at a loss. I don't know if that's because that looks like that's coming over from Q1 because they have a profit for the 3 months, which means they probably had maybe an 8 or 9 million loss for Q1. Then acquisition costs we're seeing here. This is in thousands, so 540,000 acquisition costs. 3 million here for the 6 months. Other income, other expenses. So the EBITDA for the 3 months is positive, 6 months negative 7.1. So the profit after tax. So so the losses for the year is 15 million for the 6 months. So what I would love to see is, so the outlook, I thought commentary on maybe when they expect, for example, to go back to profitability would have been good to have there. I mean, a 2 million last year could just be maybe the time of year, maybe they have contracts. And so the brackets around the number means that it was a loss. Brackets around the numbers mean that it's negative. So that's actually what I was just commenting on. That would have been good to see the MD&A say, well, though the quarter, presented a loss, we think that in X period, based on X whatever, we'll return to profitability at X time, to give shareholders something to look forward to for that. Because for last financial year, they did 35 million in profit for the year. So negative 50 now, they would need to do at least 50 million for the next 2 quarters to match what they did last year in terms of profit. If not, we'll see a decrease there, right? So that's 1GS. Right, I won't go through the other stuff now, right? So David Gray says RPL. All right, so we're doing the thing where we're doing disclaimers now, right? Based on recent events. So I must say for RPL, before I do this review, Learn, Grow, Invest Limited, which is a company that I represent. I'm a director, I'm a co-founder. We do a lot of work for RPL. And so I will try to make my review unbiased, though I may not be fully aware of any biases that I may have, right? Let's look at RPL's report. Was that a good disclaimer? It doesn't even feel that way, right? But I must say, congratulations to RPL on their success, is what I'll say, right? So MD&A here, so 430 million in revenue, down 11%. And I remember the context behind this, so I'll get to that. Operating profit up 60%. That's certainly great to see. Gross profit up 91.68 million. Net profit, right? This is the part that I'm concerned with. So now a lot of companies may highlight gross profit, operating profit. Those things are certainly great. For me, as an investor, I'm top line, bottom line. It's good to see the other areas of profit grow, but if the gross profit has grown, operating profit has grown, and the net profit hasn't grown, then that's disappointing for me. So it's good to see this 36% up from the same time last year. And I'm going to go straight to outlook. Now, what they did say, and I do remember this part, so gas prices have gone down. So because gas prices go down, and I remember RPL says they focus on low margin because they're trying to do volume. So when prices go down and their prices go down, and it may impact overall revenue, but it doesn't necessarily impact profitability, which is what we can see here, right? 5 stations here, 1 temporarily closed, 3 currently active, the Negril, Westmoreland, Paradise Pen, and the Spanish Town Road. Spanish Town Road opened in December. And of course, I have the People's Choice one here, which is dealer-owned, dealer-operated, right? And they have 2 coming soon, right? So this is, to me, all I see here in this green are opportunities for them, right? So things are looking good for them. Of course, this announcement was made, coming soon to NMIA. And just look at these gas prices compared to where they are right now, is what I'll say. All right, so let's look at the company outlook here. Am I seeing anything here? Okay, so held their AGM, which I think was well attended, by the way. We're thankful for various questions as I welcome investors to watch the meeting on our YouTube channel, of course. During the second quarter, RPL was recognized. Oh, yes. So they were recognized for being one of the fastest growing companies, which I do agree with. Fastest growing companies in the region. And they were ranked number 8 in the energy and utilities sector. So that was awesome, for sure. Right. The 93 George Street, I think that's where they had the fire, because they're still doing cleanup, still going through that. They're excited about their performance. I'm looking to see if there's anything here that we can pull on. No. So top 10 shareholding certainly looks interesting, meaning the volume of shares has certainly increased for the top 10, which is a good sign to see. So, you know, that tells that investors are confident in how they're growing. This is where we want to see the revenues, right? So for the 6 months, 2025, they mentioned that the prices were down. That's why the revenue's down. But I think they mentioned liters in terms of volume grew, right? So if the volume and the price were the same, then the revenue would have been higher. So gross profit, 162 million, up from 130. On the 3 months is also, almost increased by 50% there. So that was good to see. Their admin expenses. So for a company like this, growth companies, you want to look at admin expenses. So that's important for them to manage it in line with their growth, right? So I think they're doing a reasonable job there, but you certainly have to watch that, right? Finance costs that I mentioned, refinancing their bond. So they mentioned that on the earnings call that we had with them. So profit before tax here for the 3 months higher than last year. For the 6 months, it would be lower, but if you remember, Q1 was actually pretty low overall, was about I think 8 or 9 million. So if you look at the fact that they would have had major expenses in Q1, what I would be looking at is whether or not they can, for example, if they do, so they had 86 million last year in profits. They're more than halfway there. If they do simply 35 million for 2 more quarters, they don't even need to do 35. If they do 28 million on average for the next 2 quarters, they'll be at 100 million for the year, which would be a great milestone for them, right? So that's something that I'd be looking for them. Again, it's a quick review. I'm not looking at anything but P&L here, but they're certainly on track to, at the half point of the year, being more than half through what they did last year is certainly good to see. So expenses have increased, but they've been able to grow profitability. So let's see how the next 6 months goes for them. So congrats again to RPL. Kadim, MPC, have I ever looked at that company before? I don't even know what they do. I wouldn't be able to tell you. Well, it says Clean Energy Limited. I don't know what this company does. $64. It didn't even trade today, right? There are some days where it does no volume. I'd be very nervous investing in a company where there are so many consecutive trading days with no volume traded. I think that's scary. That's scary for me. So from June 2nd, Kadim, June 2nd, it traded 400 units. From June 3rd all the way to July 3rd, it did not trade. Did you see that? I don't know. Like, it has 29 million units outstanding. So like, yeah, I didn't even know what to say here. I don't even know what to say, right? That's scary. That's a scary proposition there. An entire month and no units have been traded. Like, I don't know. I don't know about that. Um, that's scary for me as an investor. Imagine I take a position in this company and I cannot um get out of that position. I mean, what is that top 10 like? Because if it's 29 million units, what is in the public? How do they have 29 million units? By the way, do I not remember when this company listed? Um, it, so this is 15, 18. This is about 20 million out of the 26. No, I may really need to research this company. How do they have 26 million units outstanding? What am I missing here? What's the story? I've never looked at this company before. So I look at their annual report. So Kadim, this is what I'll do for you. I will look into this company because okay, so you're saying it's a dead stock sold, it's only asset in Jamaica. Okay, so I'm like, so why you even mention why you even mention them? Why even mention them to me? Like, you just made me wonder if if JSC didn't load the right data or something. That's what this just says. It's antisocial. Okay. I do want to talk about tropical batteries. Yeah. Let me go to tropical battery. All right, one sec. I do. One second here. I am confirming with my brothers whether or not I have a men's fellowship meeting tomorrow. So I'm just doing this real quick. I apologize. Okay. Tropical battery. Load this report. I would love to hear from Alexander Melville or the tropical team. Certainly would love to. Yeah. They certainly could delist. I mean, I don't. Yeah, that may be the best thing for them. I don't know. I don't know. So I'm even loaded straight into to tropical because I was looking at it last night. So tropical battery here, and let me know if you have any questions. By the way, the stream is gonna wrap up in about 15 minutes. All right. So yeah. Okay. So the elephant in the room for tropical battery is the APO. Now the basis of allotment was released and the basis of allotment was not clear. right? So let me go to that first, because I don't think you can talk without talking about that, right? So basis of allotment here, it says Tropical Battery, the issuer, is advising that the basis of allotment of shares to successful applicants in order of up to 954 million ordinary shares made so and so and so, which was closed on July 4th. The prospective outlines one reserve share pool and a non-reserve share pool. The methodology of ordinary shares of allotment is as follows. So now, this does not tell me whether or not the offer was fully taken up, right? So it's, yeah, this was the vaguest basis of allotment that I've seen, right? So let's go to the report. Let's talk about it here. Now, I'm focusing on the 3 months again, 9 months here, right? So in this case, right, they've done their finance costs here. It says costs, yeah, right? Finance costs actually lower than the same period last year, but overall for the year, $392 million in finance costs, right? Because of the 9.5 million US loan that they took from CIBC to be able to acquire Rose batteries, right? 400 million essentially in finance costs in 1 year. So if you remove this, they would be doing fairly well. You add that 400 million to here, they'd be about 200 million in profits right now. They would certainly surpass what they did last year. But if they were not successful, which the signs are pointing to them not being successful with raising at least the full amount, if they don't raise enough, they're going to be burdened by these finance costs for a long time, right? So that's the main concern for them here. Yeah, so to lose 156 million in a quarter because of finance costs, it's going to be very hard for them. Let me look at their balance sheet, right? Because they're going to have to pull on cash. 280 million cash here. Accounts receivable is almost $1 billion, which is good. But they're going to burn through a lot of cash to cover those finance costs, right? 400 million in 9 months is a lot of cash. So certainly no dividend is likely to be announced this year. Certainly we don't know what the growth plans would be. They certainly wouldn't be able to fund any other acquisition. I didn't know that was a thing. So he said Tropical Battery is the only stock on the stock market that turned off their comment section on their Instagram page. I didn't know that was a thing. I didn't know you could even turn off your comment section on IG. That's interesting. I didn't notice that. I haven't actually been on IG a lot lately because I've been focused on the challenge, of course. But that 156, so the only story about Tropical Battery right now is the finance cost. That's the only thing, right? Because if you remove the finance costs, they're certainly growing in revenues. They would have been growing in profits. So, I mean, they have to find some way to get that debt down. So we should hopefully see by the next report, or certainly the audited numbers for the year, what that debt now looks like. But I'm not a fan of the lack of clarity, because I am wanting to understand, at least from my perspective, what is happening there. Now, typically we would do one earnings call with them for the year. I'm not sure if we'll be doing that. I'll certainly reach out and see if the team is interested, because I think them coming out and kind of commenting on it, speaking to it, would be a good move, would be to inform their shareholders what's happening, because I think when things are like this, it's important to show that you're committed to communication, committed to clarity, and be able to just, because shareholders need to know, okay, do we wait? What's happening? I think that's bridging that gap would be important for them, right? So yeah. So Richard Miller says separate. All right, so Richard, I will Honor your request, sir. I will look at Seprod. I have 10 minutes to go for the stream, so I'll try to look at it quickly. I feel like you kind of know what you get with Seprod, though, meaning, you know, billions of dollars in revenues, billions of dollars in profits. I feel like Seprod just, you know, kind of does the thing that they do, right? Yeah, so that is for Tropical. They restated their financials before their APO closed. NCB and Sagicor were like, hey, well, NCB was like, we're gonna take back, we're gonna refund you all the applications unless you tell us not to. I think Sagicor was like, hey, you know, this is the restatement, this is the situation, you know, so on and so forth, right? So they both approached it differently. And I would say that it was quite interesting to see that I've never experienced that in all my years of investing. It's interesting to see Seprod trade this way. This graph looks very interesting. I don't think I've seen so much volatility for Seprod. But yeah, so this is how it's been trading since the start of the year. Year to date, it's down 4.5%. Let's see their latest report. So Q2 here, what I do, I have fond memories of Seprod. I remember buying at $23.99. That was it. Anyway, revenues. All right, look at revenues. 75 billion up from 58 billion. That's crazy, right? Net profit is down. Interesting. So it's down to 1.44 billion from 2.5. EPS is down, of course, because profits are down. And shareholders' equity is up 47.47 billion, right? I'm going to go straight to the outlook. Revenue growth was powered by the full period consolidation of CPG and solid performance across core categories. Profitability was impacted by higher operating costs from acquisition, integration, and increased finance charges. They couldn't acquire cash. The group is committed to reducing costs, improving productivity and operational efficiency, and leveraging acquisitions for longer-term value creation. The Seprod Group anticipates that the strategic decisions taken during the quarter, particularly those focused on cost management, so on and so forth, and deepening integration across our regional operations to unlock synergies, will position the company to deliver improved margins and a sustained recovery in profitability in the second half of the year. So you see, this is what I was saying. So you notice they said here, so this is what I'm saying 1GS could have said. They're saying here that they will position the company to deliver improved margins and sustained recovery in profitability in the second half. So a simple statement like that is what I was saying 1GS could have done for their report. 10 largest shareholders, yeah, I think that's not going anywhere for a while. Going straight to the good stuff, right? 6 months, 75 billion in revenues, 20 billion in gross profit, operating profit 4 billion. Finance costs increased for sure. We see that here. And profit before tax 2.3 billion and net profit 1. Okay. So it would be the finance costs that would have impacted them for sure. I think that's the main driver here, right? So total comprehensive income down 600 million, right? So the EPS would have gone down and so on. So, I mean, Seprod, I think they do a solid dividend, if I'm not mistaken. They've announced one since the start of the year. They announced three dividends last year, $1.80. Wow. They did $1.65 the year before. So typically when a company does an acquisition, you're not going to see the same tune in terms of dividend. But let us see, because it depends on cash, right? So they may be prudent with managing our cash and say, well, let's not pay a dividend. Or they did the, oh, I love this. They did the business segment breakdown. So I would love to see OneJS do this. DRT revenue, high voltage revenue, core business revenue, that kind of thing. Yeah. So, okay. So, I mean, again, just focusing on P&L there. So separate, I'd say that they're just going to have to continue to work things out in terms of the acquisition. But I mean, certainly I'd say separate is going to be okay. Right. All right. Any more questions from you guys? Is there anything else that I need to? I'm not going to talk about Trans Jamaica tonight. I can't. I'm trying not to. Yeah, I'm not talking about Trans Jamaica tonight. But you should check out that report. Is what I'd say. Is what I would say to that. Yeah. So what I will say is, okay, great. All right. So what I will say is this. The rest of the year, so I'm certainly very, very disappointed, first of all, I think at the start of the year, I would have done my stocks to watch as like, I'm very excited, anticipating what's going to be for this year. I thought the market was positioned to have a massive recovery. We heard about stocks like, potential IPOs like West Indies Petroleum. I heard about 3 or 4 others. We're at September now, and we haven't seen more than one. So Atlantic Hardware released their report. I don't think that would have been perfect to go through, actually. I need to set some time to do that. But I'm disappointed at this point because it seems like companies are still a little conservative. Now, I get the whole thing, investors, companies are uncertain. They're not sure they'll be able to raise a capital. And I think the companies are a little bit scared of how the market will respond to their offer. I don't necessarily think they should worry about that, because here's the thing. I don't think there's anything wrong if a company comes out, even if the stock price goes down in the short term. If they're going to deliver performance, if they're going to deliver growth, their company will grow. I think it's an unfounded fear, but I really was hoping that we'd have more activity, because I think it's a great time. But what all we're seeing are bonds and preference shares and fixed income, because that's the type of market we're in right now. So I was a little disappointed to see this point of the year. No, you can certainly still make money in this market. There's still opportunities there. It's just that I was hoping for more participation as well in the market. Now, certainly a lot of people came on as Trans Jamaica shareholders. Persons would have participated in the Atlantic IPO. But even Atlantic, I think Atlantic is down 20% since listing, right? If I'm not mistaken. Let me check. It's at 87 cents. So it's down 13% since listing. So it listed in April, right? So yeah, and I think it's just, we're just going through that a little bit longer, right? All right. Hope everybody has a great weekend. Please, if you are interested in joining our Portfolio Makeover Challenge, we still have 1 day to go. Tomorrow, we're going to be talking about how to identify stocks to add to your portfolio, what to look for, strategies to buy, grow your portfolio, etc. That's what we're going to cover. We have our monthly investment challenge that is coming up next, 2 weeks from now. So August 30th, and I'm trying to find the post where I have that breakdown. So hold on, let me find that here. Because I did a post in our free community, everything that we're going to be covering for the next 6 months. So I thought that would be cool to share here just in case there's anything that you may want to learn. And I'm not seeing anything. Did I not pin the post? Okay, here we go. Yep. So in this month, we're going to cover asset allocation, how much money to invest, how to take profit, etc. Let me share my screen. I could do that. Can't I do that? Can I share? Oh, yes. There we go. All right. So you should be seeing my screen, hopefully. In September, we're going to do a very condensed version of the same portfolio makeover challenge that we have right now. In October, we're going to cover, real estate investing, crypto investing, US, we cover US markets already. In November, investing for retirement, long-term investing. So those of you who say you're long-term investors, you may be interested in that. And then December is when we close out the challenge. So the challenge is actually only still going to be around for 5 more months. So we're going to end the challenge in December. We're changing the format and everything for it to make it a little bit more impactful, right? So we always take feedback, we improve it, and we want to help persons in the best way we can, right? So our job is to help you manage your finances better, right? So not just investing, but overall money management. So again, I hope everybody's doing well. I think it's still a good time to invest. It's still something that you should be doing consistently. Don't take the approach of, let me just wait for the market to recover before I do anything. That's certainly not the best way to go about it. Take this opportunity to build good positions. Take this opportunity to do your research. Take this opportunity to do the boring stuff, and you'll certainly be happy when the tides turn and you found that you were prepared to take advantage. All right. Didn't talk about NCB that saw some growth. I know a lot of NCB shareholders are happy to see that. So kudos to you guys. I'll keep my comments to a minimum there, but I know a lot of persons who were breathing a sigh of relief for those shares to go up, right? So I'll see you guys, and be sure to join the community. Link is in the description. You can join our monthly community meetup, and again for the challenge that's in the month. And so I'll see you in one of those. All right, take care.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at Learn, Grow, Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.